in this next session about ESG and sustainability. And that's something that's certainly very close to our keynote speaker's heart. Before I introduce him, I'd just like to get our panelists up on stage. Arvana Singh, Head of Sustainable Finance at Nedbank Corporate and Investment Banking. Anne-Marie Tipu, Portfolio Manager at 91. Steve Nichols, who's Head Mitigation Manager, I should say, inside the Presidential Climate Commission. There you are, Steve. Thank you. And Annelies Keke, who's Head of ESG at Redefine. And we had a fantastic conversation on air recently. So really good to meet you in person. It's always a pleasure to do these things in the flesh, so to speak. It's just a fantastic energy. So with that, I'm going to introduce our keynote speaker, I think a very well-known business leader who has, well, I mean, he's engaged in some pretty big corporate unbundlings recently. Paul O'Flaherty, who is very well-known inside ABSA, no doubt. He's CEO of EY Parthenon now, and they are really specializing in unlocking long-term value for shareholders, talking about capital allocation, talking about things like ESG. He's served as a CFO and a CEO at listed companies on the JSE, as I'm sure you'll all know, AMSA and others, and has a keen interest in how we unlock value. To Ndaba Mkize's earlier point, how do we use ESG beyond just ticking a box to start to add value, not only to shareholders, but to communities, to the environment, and also to start improving governance, which is another big issue, as we heard from the pension funds, that they are going to be focusing on in the REIT space. So with that, Paul, over to you.
Thanks, Michael, and welcome to the panel. I think, firstly, it's nice to have a live audience. It's been more than 2 years, so I'll have to remember not to have stage fright. I think just want to talk a little bit about long-term value. You can see up on the screen there. I think the important thing about sustainability is how does sustainability work for business as well. It's not just a one-way street of sustainability being pushed down to business. And it's not just about regulation, it's not just about reporting. So I want to go through a couple of surveys that we've done. So EY has done these surveys over the last year to 18 months. And you can see a lot of movement in the markets across all of the industries, from institutional investors, standard setters, governments and regulators. You've seen all of the post-COP26, all of the activity that's happened in the EU, the carbon border taxes. EU is trying to get out of their COVID recovery through green investment. So it's significant movement in this space. Employees. The employee of today is mobile. The employee wants to work for a company whose purpose and values they aspire to, and that's really important. And then the wider society is absolutely critical. The communities, the businesses you work with, those are also lots of pressure on today's business leaders. Some of them, you would have heard perhaps of the CSRD, the Corporate Sustainability Reporting Directive. This is going to affect more than 50,000 companies globally, and this is on the reporting side. What are you doing about sustainability? But more importantly, not what you're doing, how are you going to measure yourself for success? The rise of green taxes. South African companies who are operating in South Africa want to sell into Europe. Europe's going to introduce cross-border green taxes, and those companies need to make sure that they've measured their footprints, that they're doing what's right so that they can avoid these taxes. Investors I spoke about, shareholder activism. You've seen that over the last 18 to 24 months, shareholders demanding boards actually take action in this space. And then obviously the racial diversity, the equity and inclusion, which has always been a key item for South African companies and what we're facing, but we're seeing more of that across the globe. And then consumers. Consumers who have their own supply chains, consumers who actually, your customers who rent in your buildings, they want to know how you're greening the building. They need to know, and they need to report to their customers and their investors about what they're doing. We did a survey recently across the globe in the real estate, hospitality and construction industry. And this survey was to the financial community, the financial directors. And the question was, as a finance leader, what are the 3 top environmental, social and governance issues that your organization should address in the next 2 years? So this is kind of hot off the press. Number one from financial directors across the globe in the real estate, hospitality and construction said environmental and climate risks and their impacts. That's very sobering when your peers talk to that. We also ask finance directors where you're going to spend your time reporting and governing to stakeholders, all of your stakeholders, the government, the shareholders, the communities in which you operate. Over the next 2 years, where do you think you as a finance team and as a CFO are going to spend your time? And you can see the significant increase in workforce and culture. Enhanced tax disclosure. You know, ESG is so broad. People want to know that you're a solid citizen and a good taxpayer and you're transparent about your tax affairs. Climate and environmental issues and how they affect businesses. And this is in your industries, the real estate industry specifically. And then obviously the global tax policies. So hot on the agenda when we've talked to CFOs around the globe. So defining ESG, you know, there are many definitions around it and many aspects of it. And, you know, we've moved in the world very quickly actually from philanthropic to actually a fiduciary duty. And everything in between. So it is a business imperative. But as I said before, how do you make sustainability work for you as a business? And you can see the areas where ESG covers. So it's all encompassing across many areas. I think when we sit back and we look at it, and there's a very good comment there from a CEO of a large Brazilian multinational who says, I can't afford to go green if it means going into the red. What does that mean? If I'm just going to get stuck in these regulations, if it's all about reporting, if it's all about stopping me do the business, how can this be good for me? And we relate sustainability and ESG to long-term value, building long-term value in your business. What does that mean? That means that a company needs to relook at its purpose and its values, because you can see all the demands on companies to change the way they operate. You have to look at your customer lens. You have to look at your people, your internal people lens. You have to look at your societal lens, the communities in which you operate. And obviously you have to look at your financial lens, which covers the investors and the funders of your companies. And you have to measure, you have to engage with all of those stakeholders to understand what it is about them that you can marry together to actually increase the value of your company. If you're sitting there and you don't engage with these stakeholders or you don't recognize these stakeholders, we're saying in the longer term, this will destroy value of your company. And so this is key. So it's not about regulation. It's not about policy. It's actually about your purpose. And it's actually about your values as a company and what you're doing in the broader stakeholder fraternity. We've interviewed a lot of executives around the world, and again, they talk about they have to reframe their strategy. They have to relook at their purpose and their values. They have to accelerate this transition. The effects are snowballing, and the effects and the pressures they're seeing. And you have to govern and operate. You know, you can't get away from that. You have to have those right metrics. You have to be good to your purpose and your values and measure it. And it's all about building trust. Building trust not just with your financial investors. It's building trust with all the stakeholders in which you operate. And so, you know, if you stand back and say, well, you know, I'm so far off the mark, all these regulations, all these policies, all these pressures, you need to stand back and methodically work through. And our panel today will give some really good insights on that. So where are you in the journey? That's where you need to start. Does the board and the management have the same view about where the company needs to get to? That's really important when you sit there in the executive of the company and the board is sitting in some other planet. That's very, very important. Are there transparent structures to report what you're doing on sustainability? And can it be measured? How are you communicating your value proposition? If you've reframed your strategy, how are you communicating? How are you making sure you're getting to all those stakeholders and making sure they understand your purpose and what you're trying to achieve? And unfortunately, you have to get some kind of assurance around what you're reporting, because people have a trust deficit. You can't just say, I've gone carbon negative. People want to know, well, who's assuring that that's actually true? And so you need to make sure you've engaged with those people. And then how do you integrate when you have your financial or your investors and you're having investor calls and you're talking about the performance of the company? How do you incorporate ESG metrics to explain to the people who invest in you how you've seen the landscape and how you're measuring yourself against that landscape? So I know I'm on strict time here, so without further ado, I'm going to join the panel. Okay, good morning again to the panel. So firstly, Steve Nichols, very excited to have him here from the Presidential Climate Commission. Many of you, it used to be PCCC, now it's PCCC, but many of you may not be aware, or you may have read about it, that the President launched the PCCC officially in operation in January of last year, and they've been undergoing significant undertakings for South Africa and South Africa's climate change. So Steve, for the audience, my question to you is, and I know you've joined the PCC recently, but what has been the activities since inception, and what are the focus and priority areas of last year, and what do you see as the focus areas for this year?
Yeah, brilliant. Yeah, morning everyone. So maybe some quick context. So I don't know how many of you heard of the TCFD. I'm sure it's going to come up with all the panelists. Task Force on Climate-Related Financial Disclosures was a group that was formed under the Financial Stability Board, which in turn is under the G20, with the intention of trying to understand climate risk. And so this is bankers and finance people and stock exchange owners, and they kind of concluded that climate change is such a significant risk that it should be disclosed in our financial statements, not in our sustainability reports or integrated reports, but actually try to understand how climate change impacts asset and liability valuation, how it impacts revenues and costs. And the World Economic Forum, for example, lists climate change as the biggest global risk that we face. So acknowledging those risks and understanding that those risks are changing the ways countries behave around the world, which is therefore changing commodity flows and commodity patterns, the President commissioned the Commission, and its job is to try to understand this risk. What does it mean for South Africa? And in the context of South Africa's poverty, inequality, and unemployment, the significant changes that will happen to our economy as a result of climate change are also an opportunity to undo some of the structural challenges that we have around poverty, unemployment, and inequality. So that's kind of the rough goal of the commission. Obviously, the commission is structured by its commissioners. The president and Vali Musa are the co-chairs of the commission, and then there are a range of commissioners that support the work from all sectors of society, civil society, government, business, labor. And there are 7 government ministers that are acting as commissioners, all in a sort of economic hub. And I say this just to emphasize that climate change in this context is an economic issue, not necessarily an environmental issue. So the focus of the work up until this point has been on what's called the Nationally Determined Contribution, which is the commitment that South Africa makes under the UN climate change negotiation processes. And it really, if you think about that commitment, it defines what our economy trajectory is going to be in the short term. It's also very important because it sets the level of ambition for South Africa in international markets, which impacts the ability that we have to attract international support in terms of finance, in terms of preferential trade. Which is very important because, as you know, government and private sector balance sheets in South Africa, particularly post-COVID, are quite constrained. And so our ability to attract this international support is important. And the $8.5 billion that was mentioned in the previous panel is the sort of peak of the iceberg of the kind of support that we need. So going forward, the Commission is going to be focused on a couple of key things, all in this kind of theme of economic transformation and working across three broad areas. One is mitigation, which is the work that I lead. That's how do we change the economy now to reduce our emissions and improve our competitiveness. There's a team that works on adaptation, which is the physical impacts of climate change and how do we react to those. And then there's a team that's specifically working on climate finance and how do we attract further support and how do we spend that support in a way that stimulates the economy in the most effective ways. So immediate focus really is supporting the just transition transaction. So the 8.5 billion at this point is merely a political declaration. There isn't actually a deal on the table. So how does that deal get structured? Where does the money go? We'll help support the presidency and other government teams working on that. We will also look at net zero pathways for the economy. How do you transition every sector of the economy into one that is climate competitive? But more immediately, also to the previous panel, working on energy and working with the DMRE and understanding what energy options are, both in the short term, but also the medium and the long term. What are the investments we need in renewable energy? Should we have, what level of gas should we have in the economy? Can we use nuclear? These are the kinds of questions that we need answering, and there's quite a lot of base studies that we can build off. So that's our immediate focus for the next year or so.
Thank you, Steve. Anne-Marie, portfolio manager at 91 SA. I think everybody would be very interested in your comments about how you look at investments and how is ESG growing from a metrics perspective when you look at where you put your money.
Thanks, Paul. Good morning, everybody. So I think what is really interesting to see is that there's been a sea change, a huge change over the last, I would even say 18 months actually, with a lot of the regulations just mentioned, a lot of the work and movement happening internationally and globally, and it's coming to a theatre near you very soon. Obviously in South Africa, we have a little bit of a different dynamic. We have a different makeup of our growth, of our economy, of our demographics, income structure, of our stock exchange. And so some of the flavors there will be a little bit different. But if I cast my mind back to kind of 10, 15 years ago, I think a lot of us, or maybe a third of us, a quarter of us in this room, got quite excited about the principles and the ideals of what responsible investing, as it was kind of labeled at that stage, was. And the government employment pension funds signed up to the PRI, and off the back of that, a whole lot of asset managers did as well. But there wasn't a lot of traction for a good few years. I think there was a lot of talk, there was a lot of education. I remember I almost felt as if I was force-feeding clients ESG in presentations rather than them requesting ESG considerations from us as a house. I think kind of fast forward to the last two years, 18 months, almost the reverse has happened, where I am so inundated with requests of how we view things from an ESG perspective that we almost can't keep up servicing clients from that perspective. And what does this look like? Well, firstly, it's license to operate. For companies internationally, in particular, a lot of the funds are now being categorized or ascribed a category with respect to how sustainable they are. And therefore, they're looking to invest in sustainable companies to achieve the highest rating and attract the greatest flows. So the license to operate with respect to ESG is really important in capital flow. And obviously, flow of capital also drives markets, so that's something I look at quite closely. The second is obviously ESG risk mitigation, and we're no strangers to that in South Africa. We really aren't. We've been mitigating risks of every nature for as long as we can remember. Now they've just been kind of lumped into the categories of environmental, social, and governance. But risk mitigation in these three areas is absolutely crucial. We've seen it in water in the Cape. We've seen it in the rioting of last year. We've seen it in governance explosions across the stock exchange over the last few years. And really that gets priced into company valuations. So one of the questions I have, for example, when filling out a sort of an investment report is, does this impact your valuation? How does it impact your valuation? How does it impact your comfort levels? Why does it impact your comfort levels? What can you do about it? So it's not just the metrics, it's what is the next step as well. What can you do about it? Can you engage with these companies? Can you change behaviors? Can you ask for more disclosure? I mean, just yesterday I was on a call with Annalisa and the Redefine board and management team talking about sustainability. And so that becomes really important too, not just the metrics. But the metrics are important. And the crucial thing about the metrics is, can I as an investor make sense of these metrics so I can assess every line item on the balance sheet and the income statement and make an assessment on the profitability of this company and the sustainability of those profits. And I think that is the next step, and we're starting to see that in company reporting and disclosure. I mean, I think across the board I see a number of SA REIT CEOs here, and I have to commend them on the good job the sector has done over the last few years in that disclosure. But I think the next step is making that disclosure really useful. So you want, you've improved water consumption by 5%. What does that mean for the bottom line? What does that mean going forward? And the last thing I want to say here, Paul, is just, I think it's really crucial that that gets reflected in management incentives as well. So KPIs and the read-through to the KPIs and management incentives and remuneration tells us a lot about where the company is going, what the company believes in, and whether, according to our ESG rubric or framework, those profits are sustainable.
Yeah, thanks, Anne-Marie. That's interesting. So those remuneration policy and implementation reports that go out are key for you. Thank you. Arvana Singh, sustainable finance at Nedbank, very interesting topic this. We read about green bonds, we hear about green bonds. There may have been one or two in South Africa, but maybe educate us around the world of sustainable finance and how it is evolving in South Africa.
Sure. And I do think this is a concept which does need some explanation, as there's many interpretations out there in terms of what sustainable finance is. So simply put, sustainable finance is the strategic utilization of mainstream commercial finance in a manner that would intentionally drive environmental, social, and governance outcomes, and in doing so, mitigate systematic risks and enhance risk-adjusted returns. If we look at where sustainable finance, or how sustainable finance has been born, I'd really put it down to two things. The one being the acknowledgement that private market capital flows would need to be mobilized in order to meet the funding that's required to basically plug the sustainable developmental gap. And governments themselves cannot do this alone, especially in emerging markets where wallet is stretched. And secondly, the evolving research that has come out to link environmental, social, and governance indicators to improved corporate performance in the long run. And the latter really looks at it through a framework where, for example, if we just look at the social aspect in ESG, and if we pinpoint to stakeholder relations, and what is the probability of the company facing higher lawsuits and litigation as opposed to not incurring those financial costs due to having positive stakeholder relations, is something that gets factored into a forward-looking view. So it really is about how do these environmental, social, and governance risks that companies are faced with, how could they potentially translate into a bottom line impact, and how can you mitigate against that in order to basically improve your valuations today? Sustainable finance can be demonstrated in many ways, and an example is capital allocation strategies. So with the finite amount of capital that you have, how much do you actually allocate towards your less carbon intensive industries and tilt away from your browner industries? And this is really important to start changing behavior and building back better, as we call it. And one of the mechanisms that has come about to channel those capital flows in terms of raising that and deploying that is that of green bonds, which really provides a transparent instrument to your investor universe and enables you to report back on that impact. So where we see impact funds having a really popped up and starting to increase in size, as well as from your international investor community, that's where there's value to be had in terms of providing an investment mechanism, diversifying your invest pool, and then also holding yourselves accountable to actually go then and deploy that capital towards greener purposes. Blend finance is another example of a technology that can be used, where there's various programs that have come about, particularly to support impact in South Africa. We have a location advantage in South Africa, given that relative, compared globally, the carbon intensity of our grid is one of the highest in the world. So changing and shifting the dial in South Africa can really then make a big impact globally. Another instrument is that of sustainability-linked products, where effectively key sustainability performance targets are set at the corporate entity level, and funding is raised for general purposes. But should those targets be met over the life of the debt, ultimately that should assist in the risk profile of the borrower. And therefore, there is potentially some interest rate adjustments that could occur for that as well. And this product has seen phenomenal growth globally and locally, and we've seen the markets now reach $1.8 trillion offshore, and about 20 billion rand locally in this market. It provides a little bit more flexibility to corporates in that you don't necessarily have to apply the funding raised to green projects, but you're still committing to KPIs at the corporate level. And maybe the last point there is on ESG valuation and incorporating that into the metrics. As you've heard from the asset managers, this is been explicitly incorporated either through the weighted average cost of capital, and whether this is via your equity risk premiums that you're looking at when you compare to your other counters, or effectively in driving sentiment on your share price and your trading strategies. And to be able to create value out of the good that you have already been doing in terms of ESG and the further commitments that you are going to be embarking on, positioning that with your investors is quite key, as that is an input into the overall investment decision factor. In certain industries, it's a question of whether capital flows continue to flow to them or not, whereas in others, it's a lot more granular in terms of, what is the tenor that we actually lend into this counter for? What is the tenor in terms of how long we hold this trading position? And that certainly then displays into the investment case once again.
No, thanks, Arvana. $1.8 trillion, huh? That's the industry size. Okay. Trying to get that in my mind. Annalisa Keke, Head of ESG at Redefine. You've heard the panelists. This is a big topic. You're in the industry. How do you see from an industry's perspective the risks and the opportunities that you're managing, that you're seeing, and how are you adapting to that?
Thank you very much, Paul, and good morning to everyone. I think one of the biggest barriers that's currently facing the real estate sector in South Africa when it comes to ESG is really understanding what the baseline ESG risks and opportunities actually are for the sector as a whole. Because what I've come to realize over the past few years is that, yes, you can have a few standout companies, but if some of those underlying risks aren't being managed by the sector as a whole, ultimately, even the so-called standouts in the end won't be able to take full advantage of the risks and opportunities that are associated with sustainability. And I think it's also useful to think of this conversation at an asset level, but also at an enterprise level, and the extent to which some of those risks and opportunities obviously interact. So, you've got these international rating agencies. You've got MSCI. They've got a view on what ESG risks look like for real estate companies. And SASB, which is a US-based framework, also has a view. But the problem with international guidance is that it doesn't take into account the South African context. And that's reflected in the materiality analysis that it spits back at you. So yes, it's useful, but to an extent. And ultimately, I think we as a sector need to do the work in really understanding, number one, what those risks and opportunities actually look like in the South African context, but also number two, how exactly we quantify those risks. because that is to an extent going to inform the amount that we're prepared to invest in terms of greening and obviously enhancing our sustainability efforts, and will probably play a significant role in terms of asset management as well as accessing funding as well. So there's quite a bit to think about. I think from a climate perspective, a lot of it will play out at asset level. After all, your assets really are vulnerable to whatever kind of long-term climate change risk the area that they're situated in is currently facing. And I think what I've seen as well is that there's perhaps a struggle to understand what exactly the social element looks like. And if I were to try and summarize it, I would say, try and understand and come to grips with the ESG risks and opportunities within your value chain, upstream, downstream, and also understanding how those actually look for your stakeholders at every stage of that value chain process, and then proceed from there. I mean, it's easier said than done, but I think it's important to almost take a step back and say, number one, what exactly do my stakeholders face from an ESG risk perspective? Because, for example, if you're not understanding the supply chain risks, there could potentially be supply chain interruptions, which, if they're coming from a critical supplier, could be fatal to your business or even the businesses of your tenants, who are also codependent on those relationships. Similarly, I think a lot of REITs have investments in South Africa, but also have investments offshore. And a critical question that needs to be asked is, what is the coverage of your ESG approach? Because that's going to really inform how you approach the risk and opportunity analysis as well. So if you want to take the narrowest view possible, which is, you're focusing on the buildings within your operational control in South Africa, that's all well and good. But then what is going on? And that's the question that your board is also going to ask at some point. What exactly is going on from a risk and opportunity perspective for the assets that you're holding offshore, considering that if they're located on a different continent, that ESG risk and opportunity analysis could look drastically different. And maybe just pausing on the board, I think a lot of this is going to come down to education for your employees, but also really for your board members as well. And understanding that this discussion is not just a discussion that can be had at a social and ethics committee level. It needs to make its way into the audit committee's discussions and your risk committee's discussions. And similarly, if we're talking about a proper ESG risk and opportunity framework, we really have to think about the involvement of your actual risk function and your finance functions within your organizations, as opposed to outsourcing it to the likes of me. And people like me have a role, but we are by no means the final word on the matter. So I think, obviously, some real estate companies have done a lot in terms of trying to understand what exactly that analysis looks like for them and taking steps accordingly. But we're also aware that not every company necessarily has the resources or the appetite to hire a team of sustainability professionals in-house. So for those companies, I would advise, try and look to existing networks in South Africa that are focused on ESG. The UN Global Compact, for example, is one which is fairly low cost in terms of joining fee, but at the same time gives you access to a wealth of internationally recognized resources that can really help you understand what exactly ESG means in your context and what exactly the risks and opportunities look like. So I think a lot of this discussion from a practical perspective is going to come down to whether or not we're really prepared to put our money where our mouth is, as it were. And to an extent, I think there's a clear indication from some of the financial institutions that they're prepared to help in that discussion. But I think if I were to end off my intro, I'd say, you've got to think about the cost of doing all of this, but you've also got to think about the cost of what happens if you don't. And I think that is equally important in this topic. So thank you, Paul. Back to you.
Thank you. I've been mulling over this 1.8 trillion and thinking of South Africa as an investment destination. How do we attract this? So I'm going to ask each of you, and specific to what you do. So Steve, we spoke earlier briefly about how is the Presidential Climate Commission hooked into what's happening in the globe? Do we operate in an island, or are we actually part of a bigger group here?
Yeah, I mean, so maybe some more big numbers. In the pathways work that various people around the country have done, in order to transition our economy to net zero by 2050, we need to invest roughly 4 trillion rand in power, 3 trillion rand into transport, and the numbers are of that order across pretty much every sector. And so we need a significant amount of capital, and therefore, to your question, a significant amount of external engagement and external support. So there are actually, most countries around the world have established or are establishing climate commissions to make these kinds of recommendations to their governments around transitions. So we are, the South Africa and the Presidential Climate Commission is a member of that group. We engage with a whole range of other international institutions as well. And the key issue is to try to understand the degree of that risk. And so maybe in 30 seconds, South Africa's 6 biggest exports are platinum group metals, coal, ferroalloys, iron ore, gold, and the internal combustion engine. This is not a portfolio you would choose if you were planning for a net zero future. But that's kind of the context we're in, and so we have to be able to transition those elements. But by 2050, a third of platinum group metal demand is used in the internal combustion engine. So our first biggest exporter and our 6th biggest exporter at significant risk. Coal will be out of the economy by 2050, probably earlier, around 2040. And so we have a massive balance of payments risk, which then feeds back into our credit ratings, and therefore our ability to borrow, and therefore our ability to invest our way out of this problem. But there are also lots of opportunities. South Africa can act as a major hydrogen exporter, which can bring in some of that foreign currency. We can switch our internal combustion engine to electric vehicle manufacture. So there's a whole range of quite difficult sort of macroeconomic balancing acts we have to get right here. And to your point, we need to be plugged into this international conversation, partly to see what these international trends are and partly to engage on technical expertise and support.
Thanks, Steve. Anne-Marie, 91, you invest globally. How does South African business get together to attract these investments? How do they appeal to a 91 that this is the place to invest?
So I think this will be no secret to the people sitting in the room that the fundamentals in the South African space have been tough for some time now, and forecasted going forward are not looking to get any rosier anytime soon. I think the important thing for us at this juncture is to make sure that we don't exclude ourselves from capital flows. It's actually quite scary listening to some of the rhetoric from our international clients around what they require, where they're prepared to invest, do our funds meet those requirements, where they, even within house, where they're moving funds from and to. And so as South African business, I think really committing to an ESG journey, detailing that in methods and sort of a standardized way comparable to that of companies globally, particularly carbon pathways. That's obviously the big thing at the moment. And I think the most important thing is, let's not get ourselves excluded from the conversation, just because we're not doing the work or we're not showcasing the work appropriately. I think many companies are doing good work and work that should be applauded in the circumstances. So I think that's almost the first step. And I think the next step in terms of attracting capital, well, let's get to that conversation there. But really, and I cannot stress this or emphasize this enough, it's actually quite scary when I'm talking to our London colleagues or those sitting in Hong Kong, New York, how stringent the requirements are becoming. So obviously, I think internally we deal with South African capital that's not necessarily going to leave the country. There's a finite universe, etc. But we do want to attract those foreign flows, and at best we don't want to reject them or exclude them. And so if I could encourage companies to really take that threat seriously, no matter your size. Obviously, some of the bigger companies sitting in the room even benefit more. But I think there are waves of capital to come, and South Africa has been ahead of the curve in many aspects, through history and through time. Perhaps this is another example of where we can be poster child to an extent, and retain, and then at the margin attract that capital over time again.
Thank you. Arvana, you gave us some idea of the instruments that are out there in the sustainable financing, but we've also heard a lot about greenwashing, where companies create fictitious type of metrics, don't actually comply with them. What would your advice be to corporates in South Africa wanting to access this pool of sustainable financing? How do they get their act together? How do they get their house in order? How do they get this done?
Sure, and I'm glad you brought it up, because it is a key point to ensure that we remain on a credible and authentic path in actually combating, for example, the impacts of climate change, which ultimately culminate in risk. And it really comes down to setting a level of ambition in those targets, KPIs that you set, which should be above your business as usual trajectory and above your path that you are currently on, or the status quo. And it's really showing those additionality components around investing in certain initiatives that you may not ordinarily have invested in, or may not already be aligned to your current sustainability strategy, to really show that stretch target, which is what investors are looking to see. And I know in some instances it's tricky because you've already done a lot of good and there may not be a lot of room to actually do more good. But I think that's where you start looking, broader than the E, into the S, into the G, into much, your best practice research, your employee share schemes, your retention strategies. There's a number of levers that you can play with in this equation. But I just want to say, the one thing is really think about climate resilience going forward. Whilst we've got a big impact around having a green building, I think we've got to go deeper in terms of applying our thoughts around, are you sitting on a flood line where a 1 in 50-year event is now a 1 in 10-year event? And that's really your resilience and future-proofing your business that we need to start thinking about, because that's what's going to enable you to start attracting those capital flows. Because having a sustainability strategy and some KPIs, all good and well, but if you're at the heart of your business is future-proofed against these potential climate change, that's what we really want to see in the business case.
Yeah, thank you. And I heard Michael in the start talking about the tech stock, bit of a collapse, and the South African REITs strong. But Annalisa, when you talk about the South African REITs as an industry, how do you continue to position yourselves as an investment of choice in South Africa, given all of our challenges? How do you think about that?
Well, I think it's probably a twofold conversation, and I won't even try to give justice to some of the discussions that we've had this morning around really strengthening the property fundamentals. But at the same time, I think a lot of investors are going to start asking, all right, that's all well and good. You've proven that you can still get adequate rentals and tenants for the next 12-month period. What are you doing between now and 2050? Is your business still going to be relevant in 2050? And what is it going to look like? So the question that I always ask my colleagues, which annoys them to no end, is, do you intend on managing this business in 2030 the same way you used to manage it in 2017? And if the answer is no, then we need to have a serious conversation to Arvana's point about how exactly we are actually going to live some of these ESG principles. Not just kind of making sure that there's a glossy ESG report, but to say, in the building design, in the management of the building, in the management of the waste outputs of the building, and throughout the asset life cycle, how are you integrating ESG at each stage? And how is ESG informing your investment decisions in the long term, considering the fact that we are ultimately in a long-term asset class? I think if you can articulate that properly, then I think South Africa will very much still be a very viable and attractive investment destination from a property perspective. And even though we face significant challenges, I don't think that they are at all insurmountable.
Thank you very much. We've run out of time. So to the panelists, Annalisa, Steve, Anne-Marie, Arvana, thank you so much for your insights. Really, I hope the audience understood the challenges a little bit better. So thank you very much to everybody.